This is going to be, so we're going to talk about trading news events, right? How to make a living trading news events. I've incorporated our overnight trading strategy and our sequence multiplier with news events, and I want to show you guys how and what I've been doing and how to trade it. So if you guys want to start practicing with this in a demo account, uh, to give yourself some confidence and some practice doing this, you might really enjoy. Some of you might actually really enjoy this strategy, and it might be something that you kind of mold into and adopt over time. So I'm really excited to present on this. Going to show you guys a couple of things. I'm sure. Oh, and I'm sure a lot of people are watching this in the recording because I didn't really announce this very well before the call. So if you're watching this live, hello, and if you're watching this in the recording, want to welcome you and say hello to you guys too. And I'm excited to share this. And by the way, this isn't the only time we're going to do this. I'm sure I'm going to do lots of other webinars in the future on on how to trade news events correctly. But it's really cool, guys. I've had some really good success trading news events recently when I include the sequence multiplier. So I want to show you what I've been doing and try to keep it as simple as possible. This you might actually find this even simpler than the overnight trading strategy. I know that's crazy, right? But it might even become more simple to you. So, all right, before we get started, as always, need to remind everybody about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your contract size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys, let's go ahead and jump into this. So here's what I wanted to show you guys. So a lot of people, I think there's this understanding in the marketplace that a lot of people don't trade news events, right? Why do a lot of people try to avoid news events at all costs? I think generally speaking, this is not for everybody, but generally speaking, most people avoid them because the volatility is high and there's manipulation and there's slippage, spread issues, right? There's a lot of problems that can happen at news events. Some brokers and prop firms uh, punish you for trading news events, right? Like prop firms may not even allow it, and some brokers will just widen the spreads during times of news, right? And so it can be very dicey and difficult to trade news events if there's not if you don't have really a good system behind what you're doing. And even when you have a good system, you're still going to have losing trades and you still have to manage risk and be able to roll with the punches as they come. But it also can be very, very profitable, right? And so that's what I want to show you guys today is how you can make news events a very big part of what you do in trading. Maybe it becomes the thing that you do with trading. We'll find out, right? Everybody kind of, I've noticed as I've been a coach that everybody's different and everybody needs a strategy that's kind of tailored to them and what works for them. And that's really the goal, is just to help each person find what's best. And hopefully today, for some of you at least, this is something that makes sense and will resonate with you. So, and if not, at least you got something and you learned something new today. And now you know not what you want to do going forward. So, all right, guys. So I'm excited to show you this. So here's what we're doing. Um, so I mentioned earlier, like a lot of people don't trade news events because of the risks involved during times of news, but some people like it because of the increased volatility. During times of news, you can get the markets can be moving up quick, they can be moving down quick, and that has the potential to actually help you grow your account quickly. And the other thing that's fun about news events is it can be also very exciting. You know, if you have a good strategy and a way of executing your positions when it's time to trade, it can be a very exciting, fun thing to do in the markets, right? So a lot of benefits that way. The other thing that's nice about news is you can schedule your time when you're going to trade. A lot of news events you can um, that they're scheduled in advance. We know when NFP is going to be. We know when the CPI and GDP data is going to be released. We know when the FOMC meetings are going to be. We know when the UK is going to drop their next rate statement, right? Like all of that stuff is scheduled. And so that's another benefit to trading news is all you got to look at is an economic calendar and it will show you when those news events are about to unfold, right? Okay. So a lot of benefits that way. So one of the things that I've done with news events is let me just show you kind of my progression over time. A lot of people, um, let's see, let me show you this. So when I first started trading news, um, this is the most common way to trade it. Okay, let me actually see if I can find a news event. Just like this is probably news right here. Yeah, I think this is a news event right here. So a lot of news events look just like this, where you have this big move to the upside, just boom, like one can like low volatility, then boom, big candle. So because a lot of news events can be like that, not all are like that, but some can. The most common thing to do at news events for most retail traders is to put a buy right there at right before the news is released, and then put a sell right there right before the news is released as well. And the reason why somebody might want to do something like that is because they'd look at this and say, "Hey, I think the market, if it breaks up." I want to make sure I make money on that way up. If the market breaks down, I want to make money as the market's going down, right? And so they don't really care which way it goes. They put a buy stop or a sell stop in to capture the breakout. Now, obviously, if the market breaks out nicely, this is a great strategy. But a lot of news events, for those of you that have been trading a while, you know that some of them don't do that. Some of them will go up quickly and then within just a moment's notice will be down quickly and then sometimes they'll be right back up again. It can be really devastating because if you're setting up a buy stop and sell stop order that simplistically and that, you know, just like that, you can actually lose money very fast if things don't go the right way. The other problem with placing like a buy stop or a sell stop right at the news event, like I just showed you right there, like a buy stop above and a sell stop below. The problem with doing this type of bracket trade is what if there's a lot of slippage? Okay, so slippage is where, for those that don't know, slippage is where the buy price and the sell price in the market separate for a moment because of high volatility. And what that can do is you could have a buy stop right here, but you actually get filled in on the trade like somewhere up here. And so now you just bought at the market price up here, even though you originally wanted to buy right there. But because the market volatility was so wide so fast, you could actually get triggered into the trade up here. And that's not fun. I've experienced, I know a lot of you have too, and I've experienced my own slippage myself, and it's never fun when that type of thing happens because you end up making far less than you had hoped, and sometimes you even lose money in the process. Especially if the market goes up to there, you get filled in, and then the market pulls back. Now your stop loss is all the way the heck down here, and then you end up losing way more than you had bargained for. So that's when I kind of realized a while ago, I actually stopped trading news for a long time because of that very thing. The slippage was killing me. And there really isn't a broker or a prop firm that can help you avoid that. Like it's just part of it's just what the market does. There's just gonna be slippage. And so that's when I realized, okay, I needed to stop trading news, which is what I did, or you can adapt your news strategy, which I've now done later on, but it took me years to kind of change the way I trade news now. Okay, so it kind of took some discovery and learning new techniques and skills and things like that to kind of change how I approach the news now. But I had just given up on news for years. Like I just wasn't a news trader until now. Like I'm kind of back into the news again, which is kind of fun. I do that with a lot of the other strategies we trade, like the overnight systems. We've got our scanner trades. We do price action signals. And now I want to incorporate this and I want to show you how I do it. So here's what I've been doing, guys. So what I've noticed with news events is a lot of news events will do one of two things. They'll either break out hard or they'll whipsaw. Okay. So just because there's news doesn't mean that the market's going to go crazy. Sometimes the market just doesn't go crazy. But here's the other thing that's important about news events. A lot of the times, the markets will wait in ranges for several days. Like they'll actually go sideways until the news event is finally released. And it's almost like opening up the cage. It's like I saw a video the other day where um, the Forest Service, like they captured a grizzly and they put the grizzly in this cage. Maybe they relocated the grizzly or something like that. I don't know. I think sometimes they do that. Um, I don't know the reasons, but I just know that sometimes they'll do that kind of thing, or they'll relocate animal life, and then they'll let them out of their cage. Like this grizzly, he was just kind of in this tight space, and then all of a sudden they open up the cage, and the grizzly just rips out of there, and he just like, like fast as fast can be. And you think bears aren't that fast, but actually they're way fast. And that's kind of how the market is at news events. Like you got this market or this grizzly that's all tied up, right? Before the news event, and it's just can't really break out anywhere. It'll rumble a little bit, you'll feel the tremors a little from the cage, and then all of a sudden you open it up and boom, that grizzly is gone. And that's exactly what happens to this, and it just keeps on going. So what I've learned is it's kind of dangerous when you open up the cage and the grizzly comes out. So what I do with the news events is I'll wait 5 minutes, maybe 10 minutes, 5 or 10 minutes for the initial slippage to kind of work its way through the market. Okay. So I might miss out on the initial move of the news event. But if you give it 5 or 10 minutes for the slippage and the spreads to kind of come back together, now what you're left with is just volatility, and you're left with a market that's running nicely. Okay, it's free again. You got this market that you got your grizzly bear's out. He's free. He can roam again, but his initial 5 minute of energy is kind of spent, and his unpredictabilityness is kind of gone after the first 5 minutes, and now it's like back to normal. So that's what you want with this, and I hope that's a good analogy what I'm trying to explain. But so I don't try to trade the news event right when the news event comes out, because that's where most retail traders will get burned, is when the slippage is just off the charts. But if you come in 5 minutes later, 10 minutes later, it's a more docile market. And the other thing that's nice about it is you still got that nice volatility where the market's moving. You got nice big waves, but it's not that first big crash, you know. And so that's what we're doing. So let me show you how I do this. Let me actually find. There was actually a news event I was just looking at. I was back testing. I'm still doing some back testing right now, but the last one I was just looking at, I think it was, I think it was this, on Friday, March 7th. I'm just going back and back testing right now. Let me just show you this one. Here's a news event with the CAD. You got unemployment change we had last month with the CAD. So basically, news events are anything that has red folder events. I use Forex Factory, or you can use the one on our website. We have an economic calendar there too that you can use. I like this one for back testing. I usually go to the one on our website just to see the up-to-date news. But when I'm back testing like I am right now, you just go back and you can pull up that news event. So unemployment change, that was at 8:30 in the morning Eastern time, 6:30 my time, out in the Mountain Time Zone. And also was unemployment change with the dollar. And so you want to be trading something that's going to be affected, like the CAD and the dollar are going to be highly affected during this period of time. And so if we go back and look at the USD CAD on the 7th, Friday the 7th, and let's see, I think that is right here. No, wait, where is it? Yeah, no, right here. Excuse me, right here. So we're going to zoom in. This is on a 5 minute chart. Okay, 5 minute chart. And 6:30 my time, which would have been 8:30 Eastern, would have been right here. So I'm going to draw a line right at the news event. Okay, so that was right when the unemployment change was released. You can kind of notice, what do you notice about that news event? Well, not a lot of volatility at the news event, and that's okay, because sometimes the market just needs the news event to come out, and it doesn't necessarily mean that there's going to be a lot of movement directly at the news event, but it could, and so you don't want to mess with it, right? Like sometimes you could open up, I don't know, maybe you open up the grizzly bear cage, and maybe the grizzly bear just kind of walks out, but you never know. He could be very violent, or he could just walk out of the cage and just go back into his nature space, right? And that's kind of how this is. You don't know if the news event, no one knows because no one knows the data. And so it could just open up and then go quickly, or it could not. But what we do know is that the market is likely to be set free after the news event for the next day or so. Okay. Now the market's free to do what it needs to do. Okay. So you get this nice volatility. So look at the rest of the day. Notice this is when the news event is released right here on Friday, March 7th on the USD CAD. Look at how nice these waves are. Nice move up, nice move down, nice big move to the upside, little move back, nice move down. These are really nice moves in the market. Not a lot of whipsaws either. It's just very fluid motions in the market. This is very common after news events, like the following 6, 7, 8 hours after the news event, you get this very fluid motion. And so that's what we're after, is that type of price action. And that often will happen, like I said, in the following hours after the news event. So what I've been doing is I wait 10 minutes, 5 to 10 minutes after the news event. And then I go in and then I set up my bracket trade. So instead of setting up the bracket trade when the slippage could kill you, you go in and set it up 5, 10 minutes after. You do one of those little breakout trades. So what I've been doing is I will set up a long position with a 10 pip stop loss. And 10 is what I've been using, and it's worked out so far. There isn't a huge rhyme or reason other than, well, there is some rhyme and reason to it, but basically the reason why I use a 10 pip range is because I want it tight enough so that the market can break out within the next couple of minutes or 5 or 10 minutes. I want to see the market break out and trigger me in a trade in the next handful of minutes. So I've been using a 10 pip range on all the currency pairs. I've been doing this on USD CAD, franc, euro. I've even done it on the yen. I've considered about making a little bit of a bigger range on the yen, but I haven't completely decided on that yet. But yeah, so what I'll do is I'll come in here 5 minutes after the news event. So that's basically this candle right here. I'm going to circle that. And then what I'll do is at the beginning of that candle, 5 pips above that, I'm going to put an entry to buy. And then I'm also going to have an entry to sell. So this is a sell stop order. And I'm going to set this up. Let me actually go ahead and turn this off so you can see this. But basically what I'll do is I'll come in here and I'll have a sell stop order ready to go. And basically what we're trying to do is run a sequence multiplier during this particular session. So this news event came out at the beginning of New York, which I love. Comes out at the beginning of New York, and you're just going to set up the normal overnight trade, but 5 or 10 minutes after the news event. But this time you're capping yourself at a 10 pip stop loss. So you've got like a 50 pip target because we use a 1-to-5 RR ratio on both trades. So you got to fit, you're asking the market for a lot of profit if the thing rips in your favor. Okay, so I've got basically, I'm going to extend these out so you can see. So basically what's happening here is the news event is over on that candle. 10 minutes later, I come in, set up a breakout order. I put a buy stop right here, 5 pips above the current price of the market, and a sell stop 5 pips below the current price of the market for a range total of 10 pips after the news event. So you can call it like 10 for 10. 10 minutes after the news event, 10 pip range. That makes it easy to remember, I guess. Just come in 10 minutes after the news, put a 10 pip range in there, and 50 pip or 1-to-5 target, and you're good to go. Now I'm using a sequence multiplier on this. You're going to see how that works in just a second.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
But before we do that, let's just see what happens here. So this market comes along, you trigger long first, and actually the long position is successful for quite some time in the morning. This actually goes 30 pips in your favor before that starts to pull back against you. Okay, and then it comes down, you will stop out right here on your sell, you would have triggered your buy, or your scoop, you would have stopped out on your buy, you would have triggered a sell. Then the next thing that you do is when that happens, you just come back in and do what you would normally do with the sequence multiplier. You'll just come back in and you're going to put in a buy stop right there with the sequence multiplier. But instead, actually, one of the things I'll also mention that I've been doing is I actually don't increase the sequence on the same day. So like if you're using the 0.25% risk, which is day one of a sequence multiplier, that's the risk I'm going to use for every single trade the entire day. And then the other thing that I've been doing too is I limit this to 3 switches. So if I trigger long, that's 1 switch. Okay. It was profitable for some time. It lost. That's switch 1. Then I got triggered into a sell. That would be switch 2, but it still has the same contract size, the same risk per trade. And then if that trade loses, I go to switch 3, and that's my final switch. And then that one would have worked out. You can see you would have triggered long a second time right here. And then the rest of the day, this thing actually, you can actually see you would have easily hit your take profit by the end of the day here. This thing went all the way up to there. You could have even gone for even more profit, but we'll take it. You know, a full 1 to 5 is great. That's awesome. So now you've made 50 pips. You did lose 10 pips one way, 10 pips another way, and then you won 50 pips this way on the third trade. So that's 50 pips minus 20 pips total. Your net profit for the day is 30 pips. Not bad, right? So that's what I've been doing with these news events is I get 3 total switches what I like to do is trade the news events that kind of begin at the beginning of the session. So because I plan to close any open trades by the end of the trading session. So if I'm trading the New York Open right here, and this news event was released on Friday the 7th of this month, and it came out 30 minutes after the open. That way I'm going to trade this one and I'm going to let it go all the way until the New York close or about the New York close. If the trade is still open, you'll close it. If it has already closed on its own, it's done for the day type of thing. Okay, so that's basically what we're doing at these news events. Let me show you some more examples. So this was the USD CAD. Let's find another news event where I can show you. Let's look at the Forex factory calendar, economic calendar here. Let's actually find a more recent news event. How about that? Let's look at, let's continue on here and show you some recent news events. Okay, so today is the 31st of March, Monday the 31st. Tonight we have a rate statement with the Aussie. So that hasn't happened yet, but that's technically your next red folder news event. So by the way, that's your next opportunity for those of you watching live today. You could go back, you could go and trade that tonight if you wanted to give this a shot. That's going to be tonight at 11:30 p.m. Eastern time. So if you're up that late, you could trade that technically. Um, you could go in and try to set that one up if you wanted to. Today there was some European news, but it doesn't give you a time when it was released. It's kind of just like all day. So we'll have to go back to one that was scheduled. Right here, we've got some GDP news with the CAD. So we could go back to that one and see if we can back test that one. Yeah, sure. Let's go back to Friday, March 28th, and let's go do the same exact thing that we just did. So I'm going to use the sessions indicator to help me orient myself here. Let's go back to Friday, March 28th, which would be right here. And we can back test this news event. Okay, so here is the New York session in this red area or pink area on Friday. Okay. We had right here GDP news on the CAD. It came out 30 minutes after the New York Open. That was at 8:30 a.m. Eastern time. And so let's go ahead and draw a line when that news event was released. Okay, so this was the Open, and 30 minutes later would have been right there. Okay, so that's when the news was officially released. Okay. This one was kind of docile as well. Not a lot of crazy movements. Here, let's zoom in a little bit more so you guys can see it. This is on a 5-minute chart. Not a lot of movement at the news event release, but it unlocks the genie box, if that makes sense. So even though the news didn't take off right when the news was released, that's the last thing pending for the day to basically unlock the market. Okay, the Grizzly has been released, and the Grizzly is free to leave how he wants to leave. He can walk out of the box, or he can run out of the box, right? And either's fine. But he's now been released, and so now the market can do what it needs to do. It can roam far places if it wants to go far places. Whereas before, you can kind of see that it really wasn't doing much before the news event. You can see it's just nothing, 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 nothing. News event's released, cat's out of the bag, and it's allowed to do what it needs to do now, right? This is where you can make your money. So that's what we're going to do right here. So let's go ahead and put this together. So if I were trading this, again, the timing when you'd want to come in and trade is 10 minutes after the news event. So if that candle is the news, 10 minutes later would be the opening of this. Let's see. No, let's see. Yep, that would be that. This red candle right here. That red candle is when you'd go in 10 minutes later to set up your trade. All right. And again, it's just 10 for 10, right? 10 minutes after the news, 10 pip range. Okay. So you're going to go ahead and draw up your projections. Let's draw a 10 pip range. So like that. And let's go ahead and do long position, same thing, 10 pip range. And so what you'll do is you want this so that if that's the open right there, 5 pips below that would be right there approximately. So like you'd go short right there basically. And then you'd have a long position up here ready to go. I'm actually going to remove this out of the way, the sessions, so you can see what I'm doing. So basically what we're trying to do is if this market decides to break down, it can break down. If it decides to break up, it can break up. So we're going to take whichever way it wants to go 10 minutes after the news event is released, okay? because again, the grizzly is now free to do what he wants because he's been released. He can leave quickly or he can leave slowly, but either way, he's going to leave and he's going to start to move up and down, right? So that's kind of what's happened here. Okay, so the first initial thing that happens is you get triggered within 5 minutes into your sell. It's just 5 pips below the price right here. Within 5 minutes, you're already in, and this thing starts to run away. And it actually gets kind of far in your favor right here. I like I said, I usually do a 1 to 5 RR just because that's what I've always done. So about down there would be your take profit for the day. Now you'll notice that here, let's turn on the sessions indicator again. So the market within like an hour and a half makes you profitable on that sell. This market comes all the way down to here. You're up like 23 pips. So you're pretty happy. But what happens? It comes back up, the market comes back up, and then you stop out of your sell, and then you're into your buy. Now you're in your buy, but then your buy starts, it doesn't go really anywhere real fast. So you start to lose. So you have, that's two switches. So you get switched one more time into a trade, and now you're in your sell order, and now this has a chance to win the rest of the day. Now this is kind of an interesting one because by the end of the New York close, which is right here on Friday, this one actually it actually came back in your favor right here, but then it started to climb back up by the end of the day. So with this one, you probably would have gotten pretty close to break even on that third trade, but you'd still have a net losing day. So I wanted to show you this so that you guys could see a losing day. So it's there were points where you were profitable, but I'm asking the market for a big 1 to 5 RR ratio. Like I'm asking the market for everything. Like, hey, give me a big profitable day. And if it doesn't give you a big profitable day, then you just call it quits for the day, right? And I also give myself a max of three switches during the session. That's it. So, like if you trigger short, you're short. That's one switch. Comes back up, you lose. You now trigger long. That's two switches. That trade loses. Now you're in a short. That one, like I said, was profitable that third trade for a little while, but nonetheless, it still came back up by the end of the day. You would have either closed up there or you would have closed here for a small loss on that third trade, but you'd have a net losing day still because you lost on the previous two trades. So now you have to get that money back. So what you do is if you have a losing day like this, the next day you come back with the sequence multiplier, or the next news event rather. The next time you have a news opportunity, you go ahead and trade that news event with the next step in the sequence multiplier. Okay, so you'll trade, if you're at 0.25 on this day, then on day two or news event two, you would go to step two in the sequence multiplier. So when you look at the sequence multiplier, this is basically what you're doing is right here, you've got 0.25% on day one. If you have a losing day trading news, then the next day you'll just start risking 0.38%. And the reason why you would do this is so that if you catch a really big winning day where the market just moves big time, it goes a full 1 to 5 type of thing, you want to make sure that you cover your losses from the previous day and get a nice little handsome net profit for yourself. And that's going to happen by you subsequently increasing this a little bit each day. Now, this doesn't take long. I've noticed with these news events, it doesn't take many news events at all to get a full 1 to 5 breakout. Most of the time, you'll get it within the same session. Let's find another one. Let me show, and go ahead and ask questions as you guys have those questions, but let's move on to the next news event. Let's go. So this was GDP on Friday, the 28th. Let's go find another one right here. So we have unemployment claims right here with the dollar on Thursday, March 27th. So we can use this. Let's go to Thursday, March 27th. This was just last Thursday. And you can use, when it's the dollar, you can use anything you want. You could use the euro dollar, you could use the dollar yen, you could use the dollar CAD. Typically, what I've been doing is if If it's news with the dollar, I just default to the euro dollar or the dollar yen. That's what I've been doing is just yeah, euro dollar, dollar yen. I don't care what you do. You just want something that's highly correlated to the US dollar when it's a news event that's associated with the dollar. So let's go to that one. So you got final GDP for the quarter and unemployment claims on Thursday, March 27th. So and they both came out at the same time. So that's a red folder news event. That was the day before. Let's go check that out. Let's go to the euro dollar here to Thursday, March 27th. And let's see what we could do here. Okay, so here we go. Okay, so this came out 30 minutes after the open. So I'm going to go full screen mode here so you guys can see this. News event was released at 6:30 Mountain, 8:30 Eastern. So that would be that candle right there. Okay. And so what you do is you come in here, wait for the news to be released. Again, the news could send the market flying right when it's released, or it could kind of not do much. But either way, you just want to come in when the news is released and see if you can set up a breakout trade. Okay. So 10 minutes after this news event would be this red candle right there. Okay. So this is on a 5 minute chart. 10 minutes later, puts you at that red candle. So now all you got to do is just 10 minutes later, draw your 10 pip box. I like to draw these up with a 10 pip stop loss, but using a 10 pip box, as you guys know, this is going to go about right there. And then you'll have your buy trade, 10 pip stop loss as well. And that's going to go approximately there. Basically, what you want to do is from the current price of the market, which would have been right there, you want to go about 5 pips up. That's pretty close. And then about 5 pips down. That's pretty close. So that's about the trade you would take. And then you would just make your take profits 5 times their risk, is what you're trying to do. Here, and I'm just going to draw a vertical line on this. So the end of the day was right there. Okay, so I can get rid of this sessions now. And I'm going to draw these all the way over to there. Okay, so with this, kind of an underwhelming day as well here, but let's still go over it. Okay, so the first thing to happen after you set up this trade is 10 minutes after the news event, you get triggered into a sell pretty much right away, right there. Within 5 or 10 minutes, this is going to happen quick. You get triggered into a sell. It's actually profitable for a little bit. And then that ends up coming up, loses, and then the buy trade triggers right there. That's just second order, and that one actually is profitable for just a little bit as well. It goes up, 20 pips in your favor, 19 pips in your favor, and then pulls back. You'd get triggered into a sell one last time. That's your third switch, and then it doesn't go anywhere. Okay, so that's a day where you would just lose all, the three different switches. It just doesn't take off. It's not a profitable day. And so the news event was just kind of underwhelming, which happens. I know that's crazy, right? Like sometimes we think news events are just going to always send the market flying, but not always. Sometimes you can just have this kind of meandering day like this and it just doesn't go anywhere. So that one you would just same thing. You would, okay, if you had a day like that, that would mean you would increase to the next multiplier in the sequence and then for the next news event. But you would chalk this one up as a loss. All right, let's go ahead and find another. Any questions? I just thought we'd do a few more examples of these just to make sure that you guys totally kind of like get an idea of how this works and stuff. Okay, so here's a budget release with the pound. Um, that's a news event. That's a weird one. I don't know if I would trade a budget release because it's like, yeah, it's a big deal, but it doesn't change the rate or something like that immediately. It's not like a number like GDP that you can just print right now and be like, oh, that's a crazy GDP number. Okay, send the market up. Or send it down, right? But that's not what we have there with a budget release. So I don't know if I'd trade that one, but what you do have is a CPI release with the pound on, let's see, this is on Wednesday, the 26th. Okay. Um, this is right at the London Open. So for some of you, you might not be able to trade that news event. So that's okay. And by the way, that's okay. This strategy that I'm showing you right now doesn't require you to trade every single news event. All you have to do is just when the week starts, just pencil in the news events that you want to trade and then just go in and trade those ones. Because you are going to have to be somewhat committed to trade these where you're setting up buy stops and sell stops in each direction. You might have to be kind of at present at your computer somewhat in order to do this. This isn't like the overnight strategy where you just set it, forget it, and come back later. This one you kind of like you set up the trade. You might need to check on your computer every 15 minutes type of thing until the sequence is closed or until the session is over. So it's not a real set and forget that way. Just want to make sure that's clear. But here you go. So here's one. If you, for those of you that live maybe in the UK or that are watching this in the recording, maybe you can trade CPI with the British pound at 3 a.m. Eastern time. Maybe that's a more natural time for you to trade. So let's back test this one. This is on Wednesday, March 26th. Let's find the British pound and let's go ahead and go back and check this one out. And I'm going to find the session. I like to use sessions to help orient myself. So let's go back and let's turn on sessions. And let me go back. What did I say the date was on this again? This was on Wednesday, March 26th. Okay, great. Okay, perfect. Here you go. Oh, this is a good one. Yeah, this is exactly what you want. Okay, so here you go. So here's the release of the news right at the open. Okay, so this came out right when London opened. Okay, that's the news event right there. That big old red candle is a news event candle. This is like the grizzly coming out of his cage aggressively, not docile. This is like, okay, we open the cage. Grizzly's like, get me out of here. Right? Like that's what that type of news event. So again, not every news event is created equal, but this one is the Grizzlies leaving fast. All right. So what do you do with this? Again, most traders are going to lose their butts on that move because of slippage. So you want to come in here 10 minutes after when the genie is now unlocked, okay? The cat's out of the bag and the market can move. You might miss out on the initial pips of the first candle or two, but that's okay because you want to make sure the slippage gets back to normal. Okay, spreads have got to get back to normal for this to work. Okay, so what you do is you come in here, right? At this time. Okay, so second candle right after the news event, that'd be this one right here. Okay, you would trade on that candle. And then what you're doing is you're going to set up a buy stop and sell stop order. You're going to tighten this up 10 pips. Okay, so like that. And then I'm also going to make a long projection. Okay, same thing, 10 pips. And then about 5 pips above the current price. So about right there, I'm going to put a buy stop. And then here, let me fix this. Let's see, 5 pips above the current price. That's pretty close, about there. Yeah, about there. Okay. And then this would just go right there. Perfect. And then you'll just extend these out until, okay, so you got to extend these out until the end of the London session right there. And then you also have to bring this up, take profit 5 times like that. And then you got to put your stop loss or take profit 5 times like that, approximately. Okay, now we can rock and roll. Let's go ahead and turn off the sessions. So here you go. So how does this play out? So the news event's released right here on this candle right there. 10 minutes later, you come in, put in your buy stop, sell stop order. You get triggered into a sell pretty much right away, like within 5 minutes. Again, this happens quick. Get triggered into a sell. You're in your sell. The sell is profitable like right away, like super right away. You're killing it on this trade. Within the first 2 hours, this thing is just ripped down here. You're up 34 pips there. It comes back up again a little bit, but you're still profitable. It comes down to here. You're up 38. At one point, you're actually up 46, 47 pips. You're actually within 3 or 4 pips of hitting your take profit. And then by the end of the Sydney, or excuse me, by the end of the London session, the market's down here. You'll close by the London close and you're up 35 pips. That's a cool little trade. No switching on that one. You didn't have a buy stop that triggered. It was just a sell stop order, just pure profit, no losses on this trade. So, depending on where you are in your sequence multiplier, if this was day three, let's say you had two other losing news trading days and then you trade this one, boom, you're back in business big time. So that's kind of nice. Like I said, you capture all of this volatility that comes in after the news event, but you capture it as the spreads get better and as the markets kind of gets back to some normality. But you're getting that normality with the increased involvement and volatility and money that's now come to the market, which is just awesome. So yeah, there you go. There's a pretty good example right there of high volatile news event slippage probably exists inside of that move, but you avoid that slippage by coming in 10 minutes later and then you capture the rest of the news event 10 minutes later throughout the rest of the London session and you're very profitable. So, yeah, pretty good day actually. Any questions on this? This is a fun little system. So the next news event, if you want to trade it, is tonight on the Aussie, but it comes out tonight. Here it is. Tonight, rate statement day for the Aussie. That's a pretty big news event, right? You can come in here. That's going to be at 11:30 p.m. Eastern, or no, excuse me, yeah, p.m. 11:30 p.m. Eastern. So you come in and you'll set up your breakout trade for those that want to trade. Now, that might be too late for some of you. It might not work with your schedule. You may not even want to trade this. You could come in and you could go into the Aussie pair. I've got it pulled up right here, or I had it pulled up. One of these was the Aussie. Anyway, I'll have to, maybe I'll pull it up myself. Okay, here's the Aussie dollar. Pull up the Aussie dollar. And then tonight, let's see, that's going to be over here. That's not going to be for a little while still. Wow, that's still not. This is when the news event is released, right? Oh, there it is. Actually, they got it labeled right there for you. There it is, right there. So you can see it coming up, right? That blue line is the news event that's coming out this evening. So just let that do its thing. Let the news event be released. 10 minutes later, come in, boom, get your trade in, um, get your breakout trade set up, and then let it rip either direction. If it doesn't work, then you can come back the next day or the next news event, trade the next news event until you do get one that rips. Just make sure that each day, if you have a losing day, you mark it in a journal so you know how much you lost. That way, you know the next news event that you increased the multiplier. By the way, how would that work? So let me just wrap up on this. So let's say you had a losing day with the news event and you got to get that money back, right? And then we also got to make money. So what we have to do is we have to come into the lot size calculator. Let's say that you were on day two of losses. Okay, so you got to trade the Aussie dollar tonight. So you come in here, you'll pull up the Aussie dollar. You're always going to use a 10 pip stop loss. 8, 9, 10 pip stop loss would be fine. Let's say your account's 100 grand. And let's say you're on day three. Okay, so you've had 2 days of losses trading news events. This is day three. You're hoping to get a win tonight, which would be 0.57% on the sequence multiplier. You click calculate, and then on a 100K account, this would be your contract. So you would use a $570,000 contract, 5.7 contracts total. Let's see, 570,000 units, which is the same thing as 5.7 contracts, right? And then that would be your risk per trade tonight. So that's what you would do. If it were day one, you would just do 0.25. And then there you go. That you'd use 2.5 contracts instead for a total of 250,000 units, right? All right, guys. I think that's about it. Hopefully that this gives you a good intro. We're going to do more classes on news events in the future. So if you guys have more questions in the future, I'm sure this isn't the only time we're going to talk about this, but I wanted to introduce this to you guys today for those of you that are interested. So thanks for coming, guys. Have a fantastic rest of your day, and we will see you guys in the next call. Thanks for coming.